The first panel of the day shall be moderated by my esteemed colleague, Abhishek Singh-Gupta, who is the head of multimedia here at Khaleej Times. We welcome all the speakers, and Abhishek, the stage is yours.
Thank you, Yasmin. Good morning, everyone. Thank you for making your way to this lovely venue once again. Thank you, Paul, Rengan. We are told Ben is trying to sort out some issues because obviously he's joining us virtually. So we're talking life after COVID, and it comes up quite often in our everyday conversations. Of course, we're talking about payments, life after conversation. Let's start with Paul, since Ben is still around the corner. Paul, last 18 months has been life-changing for everyone individually, but also a bit of a watershed across industries. What have you seen in terms of legislations and new tech coming up and new habits forming amongst the current generation? How do you see things have changed?
Well, I think we can't underplay the impact of the pandemic on customer behavior. Obviously, we've been forced into lockdown for a period of time and then slowly coming out of that. And we're seeing, I think, regulation, certainly in the way of payments, has started to come in, at least this year, specifically 2 pieces of legislation looking at how we put more, I guess, frameworks around how we manage payments. So I think that's still going to take some time to play out. But certainly in terms of how the pandemic was impacted, brands were trying to reach customers where they weren't being able to come into their stores. So we saw, particularly in Futtaim's business, and I'm sure a number of other retailers were trying to find ways to reach that customer. So you were going from having an e-commerce solution or an in-store environment, but many brands had to bridge that gap. They might not be fully online. So we were finding ways to offer customers products through WhatsApp, through email, through different catalog options. But from a digital payment perspective, how can they pay when they can't come to the store? You don't have an e-com site. So sending payment links out as an alternative was something that we took forward to the market, and we saw a lot of companies doing, particularly smaller startups as well, who had to get to those customers, otherwise their businesses would have dried up completely. So we were trying to find ways to do that rapidly, and once we did it with the first brand, we just rolled out every brand, and we saw a huge growth in those remote payments, as I said, bridging the gap between one and the other. And of course, like everyone has seen, there's a lot of statistics about the growth of e-commerce. Of course, that's shot up because customers still wanted to buy. They couldn't travel, but they wanted to improve their home to have a better working environment and so on. So you still saw those homeware stores and so on doing well. So e-commerce has gone through the roof. I think now is a very interesting inflection point to see customers still want to go physically into the store. And I feel we're very fortunate in the UAE that we can still go into the store compared to a lot of other countries, because you want to try on the clothes or you want to look at the product. So I don't think that the e-commerce increase, it will still continue, but I think customers are coming back into the store. So for me, it's now about how do you take that e-commerce experience in the store environment and almost digitize the store environment. That's where I see the next sort of focus coming.
Right. Okay. I see Ben joining us on the big screen now. Ben, good morning. And Ben's joining from Saudi Arabia. He's the head of digital product at Banque Fransi, if I can get that right. Ben, thank you for joining us. So Paul just summarized the last 18 months that he's seen. It's been a sea change in consumer habits, but the good news is that here in Dubai, we're still going back to sort of physical realities of space. What's it like being in Saudi Arabia? What have you seen over the last 18 months? And how has those trends shaped the world of digital payments, so to say?
Yeah, it's a good question. And Saudi Arabia has been a market much like the rest of the world in regards to the behavioral changes in the way that consumers are paying for products. I mean, there's really clear data. We're lucky now to be 18 months or so into the pandemic. We've had a full data cycle in the bank, and we have a really clear understanding about the way that customer behavior has changed. A recent Gartner report showed that 63% of customers have reported a drop in their in-store payments in 2020 and 2021, which corresponds with a 46% increase in online and mobile payments. So the way the customers are paying for things has changed, and I suppose the question is how sustainable and irreversible this will be. The lockdowns placed a limit on physical interactions, but also I think that general changing consumer attitudes towards cash and other contact-based payment methods have probably changed forever. And the way that businesses manage and accept payments on the merchant side has also changed. I mean, specifically what we've seen in the bank in Saudi Arabia underpins the global trends that we're seeing for a shift towards digital payments. We've seen digital banking in Saudi Arabia within our own bank increase by more than 30% in 2020, mobile banking by 27%, and branch visits, the exchange of physical cash or check deposits has dropped by more than 17%. So the behavior that we've seen in the bank completely corresponds to the behavior that we're seeing in the shopping malls or on the high streets. And a survey by Adobe, which we have recently analysed at the bank, shows that in the US and the UK, up to 15% of customers who have never before paid for anything online have made their first online transaction in 2020. So the audience for digital payments has grown incredibly rapidly. What I would say is that the pendulum has accelerated and the momentum has increased in the uptake of digital payments in the last 18 months, largely driven by the pandemic. But this is not a new trend. This is something that has been happening really since before the financial crisis. What interests me, and I think it was Paul that just mentioned it, is what the new balance will be between the retail spaces across online and in merchant stores or in shops. And I think what we're increasingly seeing is the creation of this third space for payments, this third space for consumerism, and that third space could be the consumer's home, for example, the proliferation of buy now, pay later technology and platforms, allowing customers to try things in their own homes before they pay for them. So really, we've unlocked a new distribution channel for physical goods for retailers and for customers through the use of digital payments. So I think this is really interesting, and certainly what we're looking at is how new payment use cases such as buy online, pay in store, or buy in store, pay online will impact consumer behavior. And really, it doesn't just fall across the previous fault lines of online or in store. We're seeing the creation of new opportunities within e-commerce, within commerce, as a result of the shift within payments that, as I said, has been accelerated by the coronavirus, but had started long before then.
It's interesting, Ben, that you mentioned, in fact, two things that really stuck out for me. One is a lot of first-timers in the UK. You gave the UK example, trying out online payments for the first time. And I'll be very curious to know what age group do they belong to, but we can come back to that question later. The other interesting bit that you mentioned is starting a new channel and new opportunities over the last 13 or 15 months or so. Let's bring in at this point in time Rengan Seshadri, head of credit cards and loans, Middle East at Citi. Rengan, sorry, you've had to wait for a while. I guess you now have a fair assessment of what Paul and Ben have said. If I may ask you of the new opportunities that you've created in your bank and what you've seen over the last 15 months.
Sure. I think first I want to take the opportunity to thank Khaleej Times for putting this event together. This is a symbolic opportunity to recognize we are in a blessed market in UAE where, thanks to the efforts by the government and everybody, this event is possible, right? This is extraordinary, and I want to appreciate everybody who is behind this. In terms of what we've seen, certainly there is an acceleration towards adoption of digital. we were late entrants to the Apple Pay market, right? When we introduced Apple Pay last year, the speed at which it get adopted, usually there's a curve that adoption will take 5%, 10%, 20% over the course of a year. We've seen that crunch down to months. So in 3 to 4 months, for example, we exceeded 25% adoption of all the eligible customers. Now that's an extraordinary trend. If you look at traditionally how any new feature, especially technology feature, is pushed to customers in terms of adoption, you're actually offering them incentives to say, would you use this? You spend it in this merchant, you will get this discount or you'll get this cash back, etc. We don't have to do any of that because customers, like you rightly said, they need the digital payments in this era where people are anxious about using physical devices. They were conscious about touching different pieces of device that other people have touched. So the contactless technology is no longer a paradigm that's out there. It's actually a norm where every customer wants to use it. So we saw that adoption rate really pick up. The other thing we see that is going on is that in UAE, there are bits and pieces of digitization that has been happening, but that bits and pieces are starting to come to shape like other global competitive markets. And I think it's only going to get exponentially grown in the next year or so, is how we see it.
Yeah, interesting. You mentioned how e-commerce is pretty much the norm now. Now, e-commerce is not anymore a fancy word. Let's bring in Paul once again back to the conversation. If I may ask you, what are the new channels that you've seen emerge over the last few months and you think will be the way forward, will be the preferred channel of payment?
Well, I think what we're seeing is that there is a real need for alternative payments in the market. So one of the biggest trends we've seen is in buy now, pay later, for example. So we launched buy now, pay later in the middle of the pandemic and saw immediate adoption. I think there is a very strong customer demand, customers who either can't get traditional credit, be it a credit card or a personal loan, or they don't want that traditional credit. So millennials, there's plenty of research showing that millennials typically don't like credit cards. They prefer to have a more of a straightforward financing option. And buy now, pay later, like in other parts of the world, has soared here. So we see online buy now, pay later. Some of our brands, you see even 40, 50% of transactions are actually on a buy now, pay later versus card. So it works in that sense. But from our side, as a merchant, we don't want to just have another form of payment. It's got to bring value. So we look at things like average transaction value, but really average customer value over a period of time. And we see significant uplift for buy now, pay later, for example. So that form of digital payment has worked both from the customer side and from our brand side. It brings incremental spend or net new customer, which is what any retailer is really looking for. So that's a clear trend. And even in store, where the journey is a little bit more clunky, we've also seen a good take up because, again, customers are wanting to buy slightly bigger ticket items. So for me, that's something that has had sustained growth across Al Futtaim's brands and in the market. We've seen, the fintech players are all getting solid funding rounds and they're growing here, Saudi, I think Qatar and Egypt. Now there's some more growth opportunities. So I think that is here to stay as a trend. Some of the other payment methods, the digital wallets that are coming through, I think there'll be a slower burn because that's more about what benefit is the customer getting from using those alternative payment methods, if it's additional cash back here or there, but you're not getting the big benefit of a credit line like buy now, pay later. So we'll start to see some of those wallets grow in use. It's hard to pick a winner right now in terms of which one is going to do better. It also depends on the brands. Some are more aligned to specific wallets that are out there. But yeah, buy now, pay later for me is a clear trend. I think the only challenge to that is how the regulation looks at it. We've seen in other markets, particularly the UK, they've said, well, this is dangerous from a consumer perspective. We need to put more rules around that. And I agree, you don't want irresponsible lending, but there's a balance not to stifle the innovation that Buy Now, Pay Later has brought over existing payment methods.
Yeah, Buy Now, Pay Later is not really a new sort of phrase that we've heard here in the UAE. I mean, it's been there, but you're right. It's gained credence over the last 1 year or so, and that is essentially because how we've lived our lives in the times of COVID. Ben, at this point in time, is it something similar that you've seen in Saudi Arabia? Buy Now, Pay Later, making more consumers choose those kind of options?
Yeah, I mean, just like the rest of the world, Buy Now, Pay Later is taking Saudi Arabia by storm, including some homegrown UAE talent, the likes of Tabby, who we at the bank have engaged with on certain levels. And, in Saudi Arabia, the market growth of Buy Now, Pay Later last year was around 11%, which is, for a fairly immature Buy Now, Pay Later market, is relatively considerable in our view, and it's definitely an opportunity that we identify. And if you look at the kind of global revenues for credit cards versus Buy Now, Pay Later, 2019 was the year that Buy Now, Pay Later revenues exceeded credit card revenues in the markets such as the UK or Australia, not globally, but in some of the more developed Buy Now, Pay Later markets. So, there's a reason that Europe's most valuable fintech, Klarna, is a Buy Now, Pay Later organization. But I think I agree with Paul that the need for alternative payments and the disruption around the edge of payments is something that for merchants, for customers, is generally a good thing. For banks, it can become a bit of a challenge. So we're seeing the reinvention of a number of the models and business lines that traditionally a retail or corporate bank like ours would make their revenue from. So of course, Buy Now, Pay Later is one of those. We're shifting the fee generation model from the customer to the merchant, and most of that discount is passed on across to the customer rather than being a fee generating opportunity for the bank. We're seeing, again, in some markets, the growth of open banking, the impact potentially of that on our traditional payments ecosystem, the reduction in the use of credit cards, so the lack of interchange income for banks is something that is becoming a quite hot topic in more of the traditional retail banks that base much of their retail banking economics or account economics on card interchange. So I think the need for alternative payments is certainly a fantastic trend in some cases for consumers where there is the protection in place by the regulator. But for the big incumbent banks, it's both a problem and a big opportunity. So what we are seeing is some consolidation across the main payment processors and schemes in the world with some of the Buy Now, Pay Later platforms. So what is happening in the view of BSF and certainly our observations is that there's a new increase in M&A activity and venture capital activity within the traditional banking sector, and that's really to the credit of the increase in alternative payment methods available. So we are seeing that our traditional business models are being eroded by the change in payments technology, the change in consumer behavior, and we're taking action to try and curtail some of that change through the new innovations. Buy Now, Pay Later is one of them. Open banking is another. Open finance is another. Banking as a service is another. So I think that the need for alternative payments from a consumer perspective and a merchant perspective is something that the banks are catching up to in some ways. And I guess the key question is, who are the bigger drivers of the alternative, the growth in alternative payment space? Probably from the view of BSF, it's the merchants, and I think Paul might also agree with that, based on his comments around that, the shops, the merchants are driving innovation, particularly in COVID times when they were looking at new ways to distribute their products to customers. So from my perspective, certainly, the technology which is the enabler for the changing consumer demands is becoming a bit of a problem for banks. But what this is creating is the new opportunity for the next wave of innovation, which hopefully we can talk about shortly.
Right, that was really well-rounded, long, but a well-rounded answer. Rengan, you've had to wait a bit longer for this as well, but let's bring you in again. Ben did talk about alternative payment methods, and that's the sort of real challenge going forward for traditional banks like yourselves. You want to list out one alternative payment method that you're working on or you're seeing being successful?
Absolutely. Like Paul mentioned, I think if you look at the alternative payments that have come in the form of either buy now, pay later or any of the other forms, at the end of the day, we have to look at who is benefiting from this, right? And how sustainable is this model? Ben is right that it does put pressure for banks to really find out. Traditional forte for banks are being challenged. But banks have to pull up the socks and get into the next gear in terms of how can we play in that space and add value, either by partnering with them, either by bringing other forms of value. In terms of alternatives that we've launched, that's something that we are proud of, is we look at, to Paul's point, what is the net incremental benefit to our customer that did not exist before? So during the COVID times, we launched something called Citi Pay All. Okay, and typically when you use a credit card, you use it at a merchant location. You go for swiping for the purchase that you've made. But what we've found is that there is a need for newer flows that can be captured using your credit line. So we allow customers to pay their rent. In UAE, for example, this is a powerful feature where to a landlord, you can actually transfer funds using your credit card. We can pay education expenses using the credit card. So these are not traditional forms of payment that you see a credit card used. But we found once we implemented that, it just happened that you have a COVID environment where, again, remote forms of digital payment are really in demand. We are seeing a pickup in that business, and we are seeing a good growth, and we believe that this is an area where we can actually step up. So while buy now, pay later is an option where we need to focus on, but there are newer forms where we can play on the front foot as well. So there are a lot of opportunities that like that we are pursuing.
Yeah, it's a very interesting point that you've just made. I mean, paying rents and school fees, something still not very popular in this part of the world. But let me tell you, I personally saw this in 2019, just at the start of COVID. I'd been to Beijing, and in China, digital payments is a way of life. You pay your grocery, you pay not just grocery, but your landlords and school fees, as you mentioned. It happens in China. It's happening in India, where I'm from, where Rengan is from, I'm assuming, where you have GPay and other kinds of mobile wallets. Paul, let me bring you in at this point in time. It is fast, it is efficient, it is convenient for us consumers. But I wanted to understand, what is the real, if not tangible, what are the real benefits from your side? What do you see? Why is it the way forward?
I think if I put kind of the mobile base, so Apple Pay, Samsung Pay to one side, and look at wallets that are developed by retailers, telcos, the super apps that are proliferating now, the benefits there is, payments is more of the anchor, or needs to be more of the anchor. What else are you doing around the payments element to get the benefit to the customer and the benefit from the merchant? So you're really looking to engage the customer and get them to come back each time. And payments just helps with that process, because hopefully they would be using the wallet more frequently and get them to come back into your ecosystem. So you see a lot of wallets out there which are for one purpose only. So Starbucks is a very good global example. They've built it into their customer journey very well, so much so that I think there's about $400 million sat in the digital wallet, earning Starbucks a lot of interest, It's almost a loan from the customer to Starbucks. So, but that's just one journey, but it works for the customer. Others, which are not so frequent, if you're using it for fuel and so on, it might be, well, why would a customer do that? So what we've launched our own digital wallet as part of the Futtaim Blue Rewards program. Apologies for the plug. But what we're trying to do there is build out the functionality to say you get all of the experience of Futtaim's brands underpinned by a digital wallet that allows you to get additional cash back, gift cards, etc., through a digital ecosystem. And we try then to make sure that the customers is continuing to use that wallet as well as the interaction with the brands. So for me, where that is working more is bringing both the loyalty aspect and the additional services aspect, which is why you're seeing the super app phenomenon that was sort of started out of China with WeChat and Alipay. You're seeing that now coming across, and there's multiple parties in the UAE. You know, Kareem has set out its stall saying we're going to become a super app. Let's see how that goes and who's going to win, because I don't think you're going to have many operating in a small market. You're probably going to have a winner takes all or one or two players. But I think you need the multiple services to make that wallet really work. And there's multiple benefits. You're getting float income, you're getting interchange sharing, potentially breakage, depending on the type of wallet you have. So there's multiple financial benefits, but it's also about that ecosystem to keep your customer with you as a merchant, or in our case, a series of merchants.
Yeah, it is about building that ecosystem, which you mentioned. Yes, WeChat and Alipay is very much a part of the ecosystem in China, as you mentioned, and that is something I understand we are looking towards in this region. But with it, we're actually running out of time. We've just got under 4 minutes. I'll quickly bring in Ben and then Rengan, and we'll wrap this up. One last question. With more mobile wallets coming into use, there's also questions about security breach. Is that something that you also consciously think? Is that something that is a conscious part of your conversation every morning when you think of building mobile wallets?
Yeah, absolutely. Of course, you know, one of the primary roles from our perspective as a bank is about instilling trust into the payments ecosystem, into the banking ecosystem. That's our primary role, without which I don't think many customers would trust us or deposit with us. So security is what we live and breathe. And certainly as the shift from traditional banking to mobile banking, to mobile wallets, to payment wallets, you know, I think in 2020, 25% of all banking apps downloaded were digital banks or mobile wallets, and that's up from around 1% in 2017. So the big shift in the way that customers are consuming banking services, from the physical to the web, to the mobile, to the wallet, has meant that we've had to change the way that we look at security. And this is something that is evolving rapidly. There are companies such as CallSign who provide new types of authentication based on the interaction that the customer can have with their telephone, the way that they hold it, the speed that they type with, the number of spelling mistakes they make when they enter their password. These types of multi-factor authentication are starting to enter the market, and they're completely passive from a customer perspective. So they don't know that they are being asked to enter the multi-factor authentication. This is happening in the background. And there are some other organizations around the world that are doing this incredibly successfully. And we are always looking for ways to reduce the ability for financial crime or fraud to take place. I think the main thing to link this with what Paul was saying just on the growth of mobile wallets. It's all about ensuring that there's a good experience that means that customers can log in securely, log in quickly, without necessarily knowing that there is a huge number of services being called in the background that ensure that their account is being logged into by that customer in the right place, that the customer, that there is the location-based security, for example. But this is largely driven, I think, again, by providing the best experience for the customer in the most low friction way. So we are looking from a security perspective at personalized types of authentication, all of the biometric authentication, of course. In Saudi Arabia, they have particularly high authentication. There's a huge, unlike some of the markets in the US and Europe, there's a huge number of steps that you require in order to add a beneficiary or make a payment or log into account. There are SMSs, there are telephone calls to verify beneficiaries. So we come from a very secure market as far as mobile banking security is concerned. But this is something that we are looking to bolster. As I indicated, the trend is moving into digital wallets and banks. I think the average user in Saudi Arabia now has 2.5 wallets or digital banking apps installed on their telephone. So this is something that is very important to us, and we're always looking for those opportunities to bolster the security. And some of those brilliant use cases that we're seeing around, the patterns that people are typing into their phone, the speed, is something that I think is really going to assist the space, and it's a great change.
Yes, it is in fact the same thing that we talked about in today's edit of Khalij Times. If you're in Saudi, I don't know if you can grab the real copy of today's Khalij Times, but that is exactly what we talked about. Increased risks means increased levels of security. Rengan, we're absolutely running out of time, just under 3 minutes. If we can wrap up in your own words, and that'll be our closing remark for today. And thank you, ladies and gentlemen, for joining us today. Rengan, closing remarks on security.
Absolutely. Thank you for, again, the opportunity. We see this as an evolution. There are increasing risks for sure, but we see this as an evolution. We operated as a bank. We still have, areas where you have wet signature requirements and so on. So we operated in an environment where there was still paper involved and the allied risks that come with paper. So digitization 1.0, if you want to call it, is essentially moving away and eliminating those risks, right? So there's a clear benefit if you move from where you are in your prior banking model into a fully digitized world. Now, like Ben said, this is taking that to the next level. Now, if the earlier fraudsters attacked using forgery and identity theft, etc., now the fraudsters are far more advanced to hacking into devices and figuring out tokenization, etc. But we have to acknowledge that from where we have come from, there is a significant benefit in operational risk savings, credit risk savings, quality of customers that you bring on board, the way that you can run the bank far more smoothly if you have a digitized process end to end. So we believe, therefore, this is the way to go. There is no turning back, especially given the post-COVID new normal world that we're going to live in. But this will be an evolving field. This will be an evolving field where you will see innovations in cybersecurity, in payment protections, and other things, especially as the new attacks start to emanate, and therefore it will be reactive to that extent as well. So I think we are in the right direction, and UAE particularly is in a great place, and you guys know that the adoption of UAE Pass, for example, is really quite significant in the last 12 months, and we believe that UAE Pass can become the central piece of legal identity of a customer. And if you can consume that as a service from the government, the identity that it provides to banks, the know your customer compliance that you have to do is going to be phenomenal. And we believe that with that, an end-to-end process, banks can actually become like a true digitized platform, like that of, say, an Amazon or Netflix, where a customer goes in, he actually registers himself, and at the end walks away with buying a product. We can become that, actually, if you can end-to-end eliminate all the friction points. And we are almost there. If you can process a customer end-to-end digitally and give him a provision of the wallet, he can actually take the mobile and start transacting. So we believe we are in the right direction, picking up pace. And I believe the UAE is going to see a faster adoption as we move forward.
I'm sure by the time we get together for the next DigiPay, which is 2022, we should be seeing a lot of what we discussed this morning. On that note, thank you, ladies and gentlemen, and thank you, my panelists, for the wonderful chat that we had over the last 30 minutes or so. We'll get together again for another panel very soon, hopefully, inshallah.
Thank you very much.
Soon.
Thank you.
very much.
Thank you.
Thank you.